Hey guys, what's up? This is Andrew for TRENDLINES.com. So as usual, let me introduce myself for those who are watching my video for the first time. I've been working as a professional trader for the past 6 years in Hong Kong, and I use technical analysis and other information like the volume, short interest, or the option market, everything that I can find on the option market to build up my view. So I'm here to show you how I do it and how to do it yourself. So today, let's see what technical analysis is telling us for Gamestop. Let's get into it. Alright guys, so this is my GameStop chart. As usual, we're going to start on the forward time frame. Then we're going to zoom in a little bit, see if we find any signals on the shorter time frame, like the hourly time frame, which is very good to use as well. And we're going to try to see what might happen next. So last week, I told you guys that I've discovered something that is actually for me the key to understanding what is GameStop doing and what will probably happen within 1 or 2 weeks. So I was trying to understand this complex correction that we're having since we reached the 340 level. So this is the second high, which is the lower high, by the way. And we are since the 10th of March correcting in a kind of messy way. So some of you are telling me that this is because this market is manipulated. What this means is that basically, and I think it is true, but I don't have any information about that. So that's why I'm not taking this into account in my analysis. But there is a lot of trades that are done in some dark pools that are involving like big investors that don't want to actually disturb the market and to pass their big sizes on the exchange. So this has always been happening. But what might happen is some maybe naked shorts, which is illegal, that might happen as well in this dark pools. And to be very honest with you guys, I'm not aware about what is going on exactly with the stock. But what I can only tell you is that indeed there are some movements, some behaviors that are to me not really expected. For example, on the daily time frame, as you can see here, the MACD turned positive. You see. So I added here, guys, I'm going to show you this very soon, the realized volatility. You're going to see how we can use it. I'm going to explain what it is. It's not an indicator that a lot of traders are using, but I'm an option trader. So it's something that I look at every day when I'm at work. So I'm going to come back to this very soon. But first, let's have a look, guys, at the MACD. All right. So I'm sorry, I have now a lot of indicators. So here is the volume, and my second one that is here is the MACD. And I told you guys, so on the daily time frame, that once the MACD has turned positive, which was here on the 28th of April, we should have a bullish cycle that would last around 3 weeks, 1 month, as it used to, in the past, in the 3 past months. But here, the MACD turned positive, and 4 days later, it turned negative. So this is why we didn't have the third wave I was expecting, and we are having a more complex correction. And maybe because, there are some selling pressure that are happening on the side market, like dark pools. I don't know. But what I know is that still, this is a complex correction that is where we can find a valid counting and apply Elliott wave theory. So this is what I'm going to stick to. This is what I'm going to try to do. And to be very honest with you guys, what I found here looks very good to me, even if it's messy, even if there are some moves that, are not very clean and I don't perfectly understand. The outcome to me is very clean, actually. So let me repeat what I see here. So I'm going to go back on the forward time frame to have more details about the moves that we had here. So maybe just very quickly, I'm going to explain what I'm trying to do. So here, the first move that went to 480 was one wave. Then we had a correction, and I'm trying to basically guess when this market would start to be bullish again. So I'm trying to find when this complex correction is going to end. So to do that, the first thing I need to be able to do is to find a proper counting here that is respecting all the Elliott wave theory rules. And so after doing that, I would be able to know when it's finished. And so here, actually, what we're having is definitely a triangle that is quite easy to see. Here we're having this ABC. And some of you were telling me, yeah, but I was saying in my previous video that it's ABC, then a triangle, and then we're going to move up. And I received some comments that were actually quite good, that were telling me, bro, you're forgetting the Y wave because it's WXY. That's true, but you know, it doesn't change anything because I can do it this way. You know, instead of starting my triangle here, I can just start my triangle here and do my A, B, C, D, E. And here, actually, the A wave of my triangle is actually a zigzag. And you are right, guys, it's good to do things properly. But ELLIOTT also, as you can see here, guys, so this is the ELLIOTT wave PDF that you can find on Google. Just type ELLIOTT wave theory and go to the second link and open this. And you're going to find here that ELLIOTT is talking about double three and triple threes. So for example, you can see here, right, ELLIOTT called sideways combination of corrective patterns, double threes and triple threes. So you can have a double three. But I agree that even when you have a double three, you usually have a zigzag between the two threes. So here my first three is a zigzag. My second three is a triangle. So I need to have a zigzag in between. So it's actually better to label it this way. And by doing so, I have actually one more wave, which is the E wave here. That is going to be a wave that is going down. And after that, I could have my 1, 2, 3, 4, 5 starting. So it makes more sense. So let's keep it this way. So what I want to tell you here, guys, is that when I do this, you know, as clean as I can. So let's go on the hourly time frame. You can see that, so there is a downward sloping trend line here. So it's the upper band of my triangle. It's not this one, it's here. So let me get rid of the WXY. You guys saw it, all right? And here the upper band is going down and the lower band is going up. Which is good about that is that actually they are converging towards the intersect that is on the 20th of May. So if this is correct, and I truly believe that this complex correction is going to happen this way and then it's going to be over, guys. So if this is correct, what I can tell you is that before the 20th of May, and I would say maybe around the 17th, so you know, something like this, we're going to have this strong move up that is going to come. So of course, I'm going to keep an eye on it. I'm going to update you guys if I see anything that goes in the wrong direction. But for now, this is what we're having. Let's analyze very quickly what happened in the recent past. So in the recent past, what did we have? So we are supposed to get this D wave that is starting right now. And you can see that here, the price action is not only supported by the lower band of my triangle, but we also have the 200 period moving average that is on the 4 hours time frame. So best moving average, best time frame. So good signal that was giving us a buying signal on the 23rd of April. And all this consolidation area is actually supported not only by the lower band of my triangle, which could be like this. All right, doesn't change much. But also by this 200 period moving average. So this gives you some hints about where this low would have happened before it actually happens. So right now, what are we expecting? Let me zoom in a little bit more. So I think it's the time for me to tell you about the volatility, guys. So let me get rid of the MACD. Bam, here, look at this. So let me take a step back. So just look at these lines that are here. So you have many of them, but you have the 5, 15, 30, and 60 days realized volatility. So it's basically giving you the average move that Gamestop is doing during this time. So you can see that the 5 days moving average, which is a weekly realized volatility, is the one that is moving the faster. And it's very interesting to notice that you have cycles in the price action, but you also have cycles in the realized volatility of the price action. And here we can see that it bottomed for the past 3 months. It was bottoming at 30, right? Right now, the realized volatility, look at this number here, is at 46. And the bottom of it is, 30, 35, you know, something like this. So what I expect in terms of volatility, guys, and then we're going to see how this gives us information for the price action. In terms of volatility, I expect something like this, maybe, and then we go higher again, you know, and we do these cycles. And I don't know exactly what is going to be the next cycle, but what I know is that we're not going to stay here long. You can see that we were here you know, maximum 1 or 2 days. Here as well, here as well, here as well. Here we came back and then went higher, but ultimately GameStop is going to start moving strongly again. So now, why is the realized volatility that low? It's because we are in a consolidation area. So it's very usual, it's very normal. We're going to have probably, I think it's almost done. So the D wave is coming, it's going to be bullish. We're probably going to take back the pivot level that is at 173, guys. I told you many times about this level that is very important for me. You can see that how many reactions we had in the past, and the sideways correction is actually centered on this level. So this is the level above which we are bullish, below which we are bearish. Here we are just moving sideways, so bullish, bearish, bullish, bearish. You know, on the short term, it's, like I said, very messy. But what we can see is that probably this on the short term, guys, so I'm giving you short term and long term views together, but on the short term, we are almost done with this consolidation. And you can even zoom in a little bit and apply the method I gave you many times, guys. So you just connect, you know, when you find a wave, that's why it's good to label it. When you find a wave, so here my C wave can be actually used to make a trend line like this, all right? You see? And once you have this trend line that is broken on the upside, so I'm going to remind you again what broken means. You need to have 2 consecutive candles before that are trading above the trend line you are considering, so that you can call it a confirmation and you can say that the trend line is broken. Once it's broken, if you guys want to buy, I don't like to buy the breakout. Some traders do it, but I don't like it because you don't know where you should really put your stop loss. So I like to buy the retest. So this level, for example, you have the breakout around 165. For example, on Monday, if we trade at 165 at the open, this is very bullish. So we might go up straight right away, but most likely we're going to correct a little bit, retest those levels around the 160 and then go higher. All right. And then do the same thing with this 175 level. So very quickly, guys, how we usually break those levels, we're going to arrive, get rejected, take energy, break it, retest it, and go higher. All right. This is the typical breakout that would probably happen around this level as well. So if you want to trade it, this is what you need to look for. You come here, you can buy the retest here. I mean, it's even before the breakout. You can buy this consolidation, zoom in a little bit, and do the same kind of exercise I did with you here. So you wait for a breakout on the shorter time frame and you buy the retest. You zoom in, you go on a 5 minutes time frame if you want to do this, like for this kind of short, small moves. So I think I'm done here. So I'm gonna just repeat quickly what I said. So on the 4 hours time frame, we are supported by the 200 period moving average. We are supported by the lower band of my triangle. If this breaks, guys, careful. It means that something else is playing out, but definitely it would mean that we might have one more corrective pattern before going higher. This is not my preferred scenario, but I need to be professional and to talk about it as well. My preferred scenario is that, as you can see, the price action is bullish here. The volatility, realized volatility, is about to burst, and usually it's gonna, you know, give us information that we're gonna do a new, like there's gonna be a reversal. So here, the reversal of the C wave would be the D wave, all right? And then we would do the E wave. And then, guys, we're gonna do the 3rd wave finally. And this one is gonna be very interesting to see, very interesting to analyze for me. So I'm gonna follow this closely, of course, but we have until the 20th of May before all of this happens. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.